Good morning, traders. Welcome to the Phoenix Blue morning update for Monday, the 25th of April. I'm Tom Colley, and I'll be taking you through the markets and the news this morning. And we'll be looking specifically at risk on, risk off again this morning. Before we do that, let's have a look at the news. Overnight, we had bank holidays in both Australia and New Zealand. If you're looking to trade these markets, be aware that there was low liquidity overnight. I know we were looking at a New Zealand entry last night, but chose not to place it based on this bank holiday. I will look to do that now this evening. The only major news data for today is the German business climate data due out at 9 a.m. this morning. The week as a whole, though, is a busy and significant week. We have statements from the Fed, the Reserve Bank of New Zealand and the Bank of Japan. The Fed 7 p.m. on Wednesday, we expect rates to be held at current levels, but we'll be looking for language that suggests an imminent rise, with June tending to be the consensus for the next rise in rates, which will potentially be 0.25% once again. New Zealand is interesting. Up until last week, we would have been looking for a reduction on this rate. However, last week we got a couple of very strong news data through, which potentially means that will prevent that rate reduction happening on this occasion, and we may have to wait until next month at least. Japan, we've already spoken about. The Bank of Japan has already indicated that it may be considering loans with negative interest rates to institutions. That would be a significant move in conjunction with an increase in their quantitative easing, and we've got something to look at in a moment which will help maybe understand exactly what they're doing with all the money that they are, in inverted commas, printing. Okay, over in Asia overnight, we had a bearish day, a bearish session on the Shanghai Composite. We're back down at these 2015 lows, significant level. We'll be looking this week whether we go back into a bullish mode or whether we break below and start looking bearish again. So at a key level at the moment. Over on the Nikkei 225, well, we've had a strong run, bullish move through here. We've had a negative or a bearish session overnight, but this is what I wanted to speak about here. On Bloomberg, they were quoted as saying that the Bank of Japan is seen as boosting ETF purchases this week as part of the Bank of Japan announcement. Well, what does this actually mean? Well, the ETFs in question are those that mirror the Nikkei 225. An ETF is a fund that is traded independently, or when you buy shares in an ETF, you are buying them independent of the underlying asset, in this case, the Nikkei indices. So you don't actually have any direct control over the companies within that asset. The interesting fact is that at this moment in time, the Bank of Japan owns about 55% of the total ETFs in this marketplace. And this means that indirectly, the Bank of Japan is a top 10 shareholder in around 90% of all the 225 companies within this indices. Now that just emphasizes how much intervention and how much support is being given to the Japanese economy in terms of not only supporting the currency directly, but also in terms of supporting the share market. Okay, over on the dollar index, well, we're at a key level, $95. We'll be looking for a break above this level this week. Our bias here is, again, dollar strength. We'll be looking to trade dollar strength versus weakness in the yen. Here is the yen. We have a big reversal move here. This was driven last week by the rumours about negative interest rate loans. and that is a perfect reversal pattern with a huge move last week. Now, this is what we would normally see in a risk-on scenario, i.e., investors are looking to buy riskier assets, such as the share indexes and equities in general. And at those times, we expect to see the US dollar JPY rate weaken. Similarly, we would be expecting in a risk-on scenario, that the equities markets would be bullish. Now, over the last week, we've had more of a bearish signal on the S&P here, which is more of a risk-off signal. So what we're seeing is neither risk-on or risk-off, but that relationship actually potentially breaking down. Obviously, we have the possibility of price reversing and going long here, and that would then reinforce the risk-on scenario. But as we see it at the moment, we've got a breakdown in that relationship. We can also look at that relationship on gold. Here we have a COT short signal. The commercials are looking or have reached levels where we expect them to start pushing this market down bearish. Now, we aren't certain that will happen. Once this low's been broken, we'll be convinced that we are in that scenario. However, the nature of COT signals, if this high is taken out, that in itself, in ignoring the COT short signal, becomes a long signal, and that would support our risk-off scenario, which, in conjunction with the falling S&P, would be what we are actually looking for at this moment in time. However, more likely is we'll see a pullback down to these levels down here before price goes bullish again and we get back into a truly risk-off scenario. Okay, guys, that's it for today. For those of you who are new to these videos, what you've been looking at is what we call the Phoenix Pure analysis. Pure because we use clean charts, we only use price action and horizontal levels, and we don't use lagging indicators. We look to buy and sell with the banks or the institutions who are the market movers. We only trade when we have a fundamental bias. We specialise in the analysis of the Commitment of Traders report, which is data that comes in on American futures markets. The nature of the way this analysis means we can use very small stops. We typically use 40 pip stops for FX majors and minors. This means we can be more profitable with a small number of winners. Now, if you're looking to improve your results, are looking to take trades where probability is highest, please talk to us by sending an email to info@Phoenix Blue. You can just have a chat with us, an email exchange, or you can arrange for a consultation where we can talk about how you currently trade fits in with the way we trade at Phoenix Blue. Okay, that brings the video to a conclusion for today. If you have any questions about the specific video, I'm at tom@phoenixblue.co.uk, and all that remains is for me to say goodbye and look forward to speaking to you again in the morning. Take care.